If you've ever made money on demo and then gone live and felt like the exact same strategy suddenly turned against you, this video is not here to comfort you. It's here to explain what's really happening, because most traders stay stuck in this phase for years without understanding it. They assume something external changed. The market, the broker, the spread, the liquidity, the session, anything except themselves. And that misunderstanding alone is enough to keep them losing indefinitely. Before we start, if you feel like this video helped you in any way at all, then do me a favor and like the video. It helps the channel and lets me know that these videos are useful. On demo, trading feels clean. It feels controlled. It feels almost peaceful. You look at the chart and it feels like a puzzle instead of a threat. You identify a setup, you enter, you let it play out. You don't feel rushed. You don't feel tense. You don't feel attached. You're not hoping. You're not praying. You're simply executing. That's why demo trading often feels like proof that you finally figured it out. Then you go live and suddenly nothing feels the same. The chart hasn't changed, but your body has. Your breathing changes. Your posture tightens. Your attention narrows. You start staring at the numbers in the corner of the screen instead of the structure in front of you. You feel urgency where there was none before. And now every decision feels heavier than it should. That's the moment most traders panic internally, even if they don't admit it out loud. They think something went wrong, but nothing went wrong. Something was revealed. Demo trading removes consequence, live trading introduces it, and consequence changes behavior at a biological level. On demo, there is no threat. There is no loss that matters. There is no pain signal. Your nervous system stays regulated because there is nothing to defend against. That's why your thinking stays logical. That's why you follow rules naturally. That's why patience feels easy. You're operating from the prefrontal cortex, not the survival brain. Live trading flips the switch. The moment real money is involved, your brain categorizes the experience differently. It's no longer a simulation. It's no longer abstract. It's no longer safe. Even if the risk is small, the brain does not calculate risk the way spreadsheets do. It reacts to the possibility of loss, not the probability of it. This is why traders say things like, "I know what I should do, but I just can't do it." That sentence alone tells you everything. Knowledge isn't missing, control is. On demo, you don't need control because nothing threatens you. On live, control becomes an obsession because you feel exposed. Think about how you behave when a demo trade goes against you. You notice it, but it doesn't hijack your attention. You don't feel compelled to act. You don't feel embarrassed. You don't feel stupid. You simply let the trade play out because that's what the plan says. Now think about how you behave when a live trade goes against you. Your mind immediately starts narrating. What if this keeps going? What if this is the one that wipes out my gains? What if I entered wrong? What if I should have waited? What if I moved the stop just a little? What if I close now and re-enter later? That internal dialogue is not analysis. It's anxiety disguised as logic, and the market punishes that relentlessly. On demo, you trade probabilities. On live, you trade outcomes. That shift alone destroys consistency. Most traders believe discipline means forcing yourself to follow rules. That's not discipline. That's resistance. True discipline is when following the rules feels easier than breaking them. Demo creates that environment. Another reason demo profits don't survive live trading is because demo allows you to separate identity from outcome. Losing on demo does not say anything about you. Losing live feels personal. It feels like a reflection of your intelligence, your patience, your self-control, your worth. That emotional attachment creates pressure, and pressure distorts judgment. When a trade becomes a statement about who you are, you can no longer execute it cleanly. This is why traders often spiral after a single live loss, even though they handled dozens of demo losses without blinking. The loss itself isn't the problem. The meaning attached to it is. And this is where most traders get stuck. They keep refining strategy, adding filters, switching indicators, changing time frames, all while ignoring the real issue. Their behavior changes under pressure, and pressure is not a bug in trading. It's the environment. If trading didn't involve pressure, everyone would be profitable. Demo trading also lies to you about patience. On demo, waiting feels neutral. You don't feel the clock. You don't feel like time is slipping away. You don't feel behind. Live trading makes waiting feel expensive. Every minute without a trade feels like lost opportunity. Every missed setup feels like money left on the table. That perceived scarcity pushes traders to force entries they would never take on demo. The irony is that the market pays patience and punishes urgency. Demo rewards patience by default. Live requires you to earn it. Another silent killer is position size. On demo, traders almost always tolerate risk better than they realize. Even when they think they're being conservative, the emotional impact of loss is close to zero. That conditions the brain to believe that level of risk is manageable. Then live trading introduces real consequences, and suddenly that same risk feels unbearable. A drawdown that looked normal on demo now feels catastrophic. And instead of adjusting systematically, traders react emotionally. They reduce size randomly, they increase size to make it back faster. They change behavior trade to trade. Consistency disappears. This is why so many traders say they were profitable on demo, but couldn't replicate it live. They weren't trading the same system. They were trading the same rules with a completely different nervous system. Here's something most people never hear. Live trading is not about making money. It's about learning to sit with discomfort without reacting. Profit comes later. Most traders reverse that order and pay the price. If this is resonating, stay with it. This video is not meant to hype you up. It's meant to slow you down enough to see the real problem. Another thing demo trading hides is how much traders rely on certainty. On demo, uncertainty feels manageable because the outcome doesn't matter. On live, uncertainty feels threatening because the outcome does. And since the market never offers certainty, traders constantly feel off balance. This leads to overanalysis, hesitation, and late entries. Or worse, emotional exits that sabotage otherwise profitable trades. Trading is one of the only environments where being right too often early actually hurts you later. Demo success can inflate confidence without building tolerance. And tolerance is what live trading demands. Most traders think confidence means believing in your strategy. That's only half of it. Real confidence is believing you can execute even when it feels uncomfortable. Demo doesn't train that. And this is the point where most people quit. Not because they lack intelligence, but because they weren't prepared for the psychological cost. If you've ever thought maybe trading just isn't for me after going live, understand this. That thought is not proof you can't trade. It's proof you've entered the real phase. The technical phase is easy. Charts, indicators, rules. The psychological phase is brutal and no one escapes it. This is why most traders fail with good strategies and why mediocre strategies can still make money when executed consistently. Live trading exposes the truth. Not about the market, but about you. And until you accept that, demo profits will always stay on demo. One of the biggest differences between demo and live trading shows up in the moments nobody screenshots. The quiet moments, the waiting, the time between setups. On demo, waiting feels neutral. You might even enjoy it. You feel patient because there is no emotional cost to waiting. On live, waiting feels heavy. It feels like time slipping away. It feels like you're falling behind. That discomfort pushes traders into trades they never planned to take. This is where boredom becomes dangerous. Boredom in live trading is not harmless. It is a signal your brain is seeking stimulation. And when money is involved, stimulation often comes from action. Traders convince themselves that activity equals progress. They start scanning lower time frames. They loosen rules. They take marginal setups. Not because the strategy changed, but because their nervous system wants relief from discomfort. On demo, boredom doesn't demand relief. On live, boredom feels expensive. That's why traders overtrade. Another place where demo and live diverge sharply is how traders experience winning. On demo, wins feel nice but contained. You don't cling to them. You don't protect them aggressively. You don't feel entitled to more. On live, wins trigger something else entirely. Relief, validation, confidence spikes. And confidence spikes are often followed by mistakes. After a live win, many traders subconsciously relax rules. They feel ahead. They feel like they're playing with house money. They take trades they wouldn't normally take. Or they increase size slightly without realizing it. This is not greed. It's emotional imbalance. The nervous system swings from fear to relief, and relief reduces vigilance. Demo rarely exposes this cycle. Live punishes it. Then there's the way traders sabotage winners. On demo, traders let winners run because there is no fear of giving money back. On live, traders cut winners early because the idea of losing unrealized profit feels worse than the idea of missing potential gains. This is loss aversion in action. The brain treats unrealized profit as already owned. So when price pulls back even slightly, it feels like loss. That's why traders say things like, I didn't want to let a winner turn into a loser. On the surface, that sounds responsible. Underneath, it's fear. And fear destroys reward to risk. Most strategies rely on letting winners reach target to offset losses. Demo allows that naturally. Live encourages premature exits. Over time, that one behavior alone can turn a profitable strategy into a losing one. Another internal shift happens around control. On demo, traders accept lack of control easily. They place the trade and move on. On live, traders crave control. They monitor every tick. They adjust stops. They micromanage. They interfere. That illusion of control feels comforting, but it reduces performance. The market does not reward control. It rewards acceptance. Demo makes acceptance easy. Live makes it uncomfortable. This need for control often shows up as overmanagement. Traders move stops to break even too early. They trail stops inconsistently. They close partials without rules. Each adjustment feels small, justified, logical. But when repeated over time, those adjustments destroy expectancy. Live trading tempts you to feel involved. Demo lets you feel detached. Another thing demo hides is how traders handle streaks. On demo, losing streaks feel like data. On live, losing streaks feel like danger. Even a few consecutive losses can trigger panic responses. Traders start questioning everything. They change rules midstream. They abandon systems that are statistically sound. This is where impatience shows up again. Traders want certainty back immediately. They want to stop the bleeding, so they interfere. And interference prolongs drawdowns. Profitable trading requires the ability to sit through statistically normal losing streaks without changing behavior. Demo makes that tolerable. Live makes it psychologically demanding. There's also the issue of self-talk. On demo, self-talk is neutral or curious. On live, self-talk becomes critical. Traders start labeling themselves. I'm bad at this. I always mess up. I should have known better. That internal dialogue drains focus and increases emotional load. The market doesn't respond to self-criticism. It responds to execution. But self-criticism makes execution harder. Another subtle shift happens with time perception. On demo, trades feel quick. Losses pass. Wins pass. Time feels compressed. On live, time stretches. A single losing trade can feel like it lasts forever. A drawdown can feel endless. That distorted sense of time amplifies emotional responses. This is why traders often exit too early on live. They want the discomfort to end. Not because the setup failed, but because the feeling became unbearable. Demo does not train endurance. Live demands it. Let's talk about fear of missing out. On demo, missing a trade feels irrelevant. You shrug and move on. On live, missing a trade feels painful. You imagine the profit you could have made. You replay the scenario in your head. That mental replay increases urgency on the next setup, and urgency leads to poor entries. This is how traders end up chasing price. They enter late, they widen stops, they justify bad fills, they do everything their demo self would never do. Another major difference is accountability. On demo, there is no real accountability. Losses don't need to be explained. Wins don't need to be defended. On live, traders often feel accountable to themselves, to others, to expectations. That pressure adds weight to every decision. Pressure compresses thinking. It reduces flexibility. It narrows perspective. Demo keeps perspective wide. Live narrows it. This is also why traders who trade other people's money struggle even more. The added layer of responsibility amplifies fear. That's why rules and automation become even more important as stakes increase. Another thing demo trading hides is fatigue. Live trading drains mental energy faster. The emotional load of risk compounds throughout the day. Traders become less disciplined as sessions go on. They make mistakes late that they wouldn't make early. Demo does not simulate this fatigue accurately. This is why professional traders structure their day carefully. They limit sessions. They reduce decision fatigue. They respect their own limits. Demo traders often ignore this entirely. Another uncomfortable truth is that many traders secretly hope live trading will feel exciting. They confuse excitement with engagement. When excitement doesn't show up or shows up as anxiety instead, they become disappointed. That disappointment fuels impulsive behavior. Profitable trading is boring. Demo accidentally teaches that lesson. Live test whether you can tolerate it. Another reason demo profits don't survive live trading is because demo allows perfectionism. Traders wait for perfect conditions. Live forces compromise, spreads widen, slippage happens. Fills aren't perfect. Traders get frustrated because reality doesn't match expectation. Perfectionism collapses under live conditions. Flexibility survives. Now let's talk about something rarely discussed. Many traders subconsciously don't believe they deserve to make money trading. On demo, that belief stays hidden. On live, it surfaces as self-sabotage. Traders exit early. They avoid scaling up. They hesitate on valid setups. They unconsciously protect themselves from success because success feels unfamiliar. This is not talked about enough. Trading exposes belief systems, not just skills. Demo trading doesn't challenge those beliefs. Live trading forces confrontation. If any of this feels uncomfortable, that's a good sign. Discomfort means awareness. Awareness is where change begins. At this point, many traders ask the wrong question. They ask, how do I stop feeling this way? That's the wrong goal. You don't stop feelings. You stop reacting to them. Live trading will always involve emotion. The goal is not emotional numbness. The goal is emotional irrelevance. You feel it, but it doesn't change behavior. That skill takes time, exposure, small size, repetition. Most traders rush this process. They want demo confidence immediately on live. That impatience creates failure. The truth is simple but hard to accept. Demo shows you the strategy's potential. Live shows you your readiness. If they don't match, it's not a flaw. It's feedback. And feedback is only painful if you fight it. This is why traders who succeed long-term often say trading changed them as a person. If you're still listening at this point, you're already ahead of most people. Most traders never get this far mentally. They stay stuck blaming tools instead of behavior. And this is the turning point. Either you slow down and build tolerance, or you keep searching for the next strategy and repeat the same cycle forever. Demo profits don't survive live trading because demo does not require emotional maturity. Live does. One of the most overlooked reasons demo profits do not survive live trading is that demo quietly trains habits that are harmless in simulation, but destructive in reality. Demo does not punish hesitation. It does not punish overthinking. It does not punish impulsive behavior. It allows you to reset emotionally after mistakes without consequence. That creates a false sense of control over your behavior that disappears the moment stakes are real. On demo, you can break your rules and still feel fine. You might even rationalize it as learning. On live, breaking rules has a cost, and once cost enters the picture, behavior changes whether you want it to or not. This is why traders often feel confident right before going live. Demo has not tested their discipline. It has only tested their understanding. Understanding is easy. Discipline under pressure is rare. Another habit demo reinforces is constant evaluation. On demo, traders frequently pause to analyze performance after every trade. They tweak things quickly. They optimize aggressively. Because nothing is at risk, constant adjustment feels productive. On live, constant adjustment becomes instability. Strategies need time to express edge. Demo rarely teaches patience at the system level. This leads to one of the most damaging cycles in trading, the strategy hopping loop. Here's how it happens. A trader uses a strategy on demo and sees success. They go live, they experience discomfort. Losses feel heavier, execution degrades, results decline. Instead of recognizing behavioral interference, they assume the strategy failed. So they switch strategies. And something interesting happens. The discomfort temporarily disappears. Why? Because novelty resets emotional pressure. New strategies feel exciting. Hope replaces fear. Expectations reset. The trader feels relief. And for a short period, results may even improve because emotional load is reduced. But eventually the same pressure returns, and the cycle repeats. This is why many traders have a graveyard of strategies they once believed in. It's not because the strategies were bad. It's because the trader never stayed long enough to adapt emotionally. Demo reinforces this cycle because switching strategies has no cost. Live trading makes the cost unavoidable. Another thing Demo hides is the cost of inconsistency. On Demo, inconsistency often goes unnoticed because losses feel small and irrelevant. On Live, inconsistency compounds stress. You never know what to expect from yourself. That uncertainty becomes exhausting. Ironically, most traders chase complexity when what they actually need is consistency. Complexity feels safer because it gives the illusion of control. More indicators, more filters, more confirmations, more rules. But complexity increases decision load, and under pressure, increased decision load leads to paralysis. Consistency feels boring. Demo makes boredom tolerable. Live makes boredom uncomfortable. And boredom is often where traders self-sabotage. Another thing that changes dramatically from Demo to Live is how traders relate to timeframes. On Demo, traders often respect their time frame. They wait for candles to close, they let setups form. On Live, traders drop to lower time frames out of impatience. They try to get better entries. They seek relief from waiting. This usually leads to worse execution. Demo does not penalize this behavior. There's also the issue of overconfidence built on incomplete data. Demo success over a short period can create unrealistic expectations. Traders start believing they should win more often than probability allows. When live trading introduces normal losses, those losses feel like anomalies instead of inevitabilities. That misinterpretation fuels emotional reactions. Traders try to eliminate losses instead of managing them, and the attempt to eliminate losses creates more of them. Another subtle shift happens with motivation. On Demo, motivation is internal, curiosity, learning, improvement. On Live, motivation becomes external. Money, pressure, urgency. That shift changes behavior. External motivation increases stress and reduces flexibility. This is why traders often perform worse when they desperately need money. Pressure narrows thinking. Demo does not simulate that dynamic. Another reason Demo profits don't survive live trading is that Demo does not force traders to confront their risk tolerance honestly. Many traders believe they are comfortable with risk until risk becomes real. Live trading exposes the gap between perceived tolerance and actual tolerance. That gap is where fear lives. Most traders try to close that gap by forcing confidence. That never works. Confidence comes from familiarity. Familiarity comes from repetition. Repetition requires time. There is no shortcut through this phase. Now let's talk about what actually works, not hypothetically, not motivationally. Practically, successful transitions from Demo to Live do not happen through sudden courage. They happen through gradual exposure. Traders who succeed reduce position size to the point where live trading emotionally resembles Demo. That allows behavior to remain stable. They focus on execution quality instead of profit. They treat early live trades as data collection, not income generation. Most traders skip this phase because it feels slow, but slow is stable, fast is fragile. Another key difference is how successful traders frame losses. They do not see losses as failure, they see losses as cost of participation. Demo makes this easy. Live requires deliberate reframing. This reframing is not positive thinking, it is statistical thinking. One trade means nothing. A series means everything. Another important shift is reducing monitoring. Many traders sabotage themselves by watching trades too closely. They sit and stare. They amplify emotional responses. Successful traders limit screen time. They trust their plan. They reduce sensory input. Demo does not punish over-monitoring. Another factor is expectation management. Successful traders expect drawdowns. They plan for them. They size for them. They mentally rehearse them. Demo rarely forces this preparation. Live makes it mandatory. Another difference is humility. Demo success can inflate ego. Live trading humbles quickly. Traders who resist humility suffer longer. Traders who accept it adapt faster. This is why experienced traders often sound calm and unemotional. Not because they lack passion, but because they've seen everything before. Familiarity dulls emotional spikes. Demo cannot give you that familiarity. Only live time can. Another critical point is identity separation. Successful traders do not identify as their results. They identify as executors of a process. That separation protects emotional stability. Demo encourages it unintentionally. Live requires conscious effort. If you attach your self-worth to outcomes, live trading will feel unbearable. If you attach your self-worth to discipline, live trading becomes tolerable. Another reason demo profits don't survive live trading is because demo does not test patience at scale. Waiting one day is easy, waiting weeks is harder, waiting months is even harder. Live trading often requires long periods of flat performance. Demo rarely conditions traders for that reality. This is why many traders abandon systems right before they recover. The traders who succeed understand this pattern and prepare for it emotionally. They do not expect linear growth. They expect noise. Another truth most people avoid is that live trading changes you. It reveals impatience, it reveals control issues, it reveals avoidance patterns, it reveals emotional triggers. Demo hides these things. Some people walk away when they see themselves clearly for the first time. Others grow. If you are still listening, that means you are leaning toward growth. The final piece is acceptance. Acceptance that trading is not about feeling good. It is about acting consistently. Acceptance that discomfort is part of the process. Acceptance that results lag behavior. Demo profits don't survive live trading because demo does not require acceptance. Live does. Once you accept that, everything changes. You stop searching for magic. You stop chasing perfection. You stop blaming the market. You focus on execution. And execution is boring, repetitive, emotionally neutral, exactly the opposite of what most people expect trading to be. But that boredom is where consistency lives. If you can execute when it feels boring, when it feels uncomfortable, when it feels pointless, you can execute when it matters. And that is the real edge. This is why demo profits fail and why live profits are rare. Not because the market is unfair, but because it demands emotional maturity most people never train. If this entire video resonates, let it sit. Don't rush to change anything. Awareness comes before adjustment. The market rewards those who can stay present under pressure. And once you can do that, demo profits stop being a tease and start becoming reality. This is Trader's Mind TV. Thanks for watching.